try my best to tell about him and his achievements and what he can do. Mr. Syed is one of the main contributors in building the fintech ecosystem in Hong Kong. He is also the co-founder of many startups, which include FinStep Asia. He is also the FinTech Association head in Hong Kong. He has been quoted in many different the best websites you can say, including CNBC, Bloomerang, Financial Times. He's basically a person who has done, he's like us, basically has done engineering from India. Then he moved to Hong Kong, did his MBA. Then he did his MBA from London Business School. And now he has been founder of many different startups, you can say. And if I want to summarize it with this, he's basically a big shot. That is the two line. Hello, Mr. Syed. You were there with us? I guess he's joining in a second.
Sorry, I was doing the cardinal sin of being on mute. Firstly, thank you so much for that introduction. Achintya was right about my profile, but he wasn't right about me being a big shot. The only thing big about me is size, physically. Otherwise, I'm not. I'm a small fish. And I'm very honored to be presenting to you guys today. So thank you for having me. Really appreciate it.
Thank you so much for joining us today. I guess I would let you know that Mr. Syed is joining us from Hong Kong with us right now. And I hope so it's a night over there and we're not disturbing you at dinner.
No, you're not disturbing at me at all. It's a complete pleasure to be here. Thank you for having me.
Okay, sure. So we can start with your presentation.
Sure. Give me a second, please. Just a second. Sorry, just needed to add something.
Guys, everyone, we know that you guys have a lot of questions for Mr. C. We'll have a small presentation of 30 to 35 minutes. After that, we'll be open to Q&A. You can put your questions in the chat and we'll entertain those questions.
Right. I wanted to add something based on your request. I'm just going to do that. So look, let me start off. Presentation. Share screen. Can everybody see the screen which says China ecosystem?
Yeah, of course, it's visible.
I would love if you all are interactive as much as you can be. I know your videos are turned off, so it's a whole different ball game. But if you want to make any comments, have any questions while I'm presenting as such, I would love to answer those questions in the chat. And Achintya could help me when those questions are being asked, right? As long as they're being relevant with what we're talking about. So when we talk a lot about fintech, right, we talk about two markets. One is the India market and one is the China market in Asia, right? But before we do that, I want to ask you a question, and please type this out in the chat box on your right. Is what does fintech mean to you? And I'm going to stop my share because I want some answers. I want the concentration on that. So what does fintech mean to you? Please answer that. Combination of finance with technology. Okay, finance and tech, right? What else does it mean beyond that definition of finance plus tech, which is, then you're putting the short form, but what does it really mean for you as an individual, for you as a person, and when you're interacting with, when you hear the term fintech? Easy financing for everybody, payment gateway, application of tech so that it improves traditional finance, easing finance, and the new normal for every sector, investment, Paytm, brand association, yes, and new set of finance which can reach wider domain. Okay. Now, Paytm was a good example. For everybody else who did not mention, when you think of fintech, what's the first what's the right term for it? What's the first company, or let me rephrase it, what's the first interaction that you feel was fintech in your life? And think it through, right? 20 years, 30, 25 years of your life that most of you have lived. What was your first interaction with fintech? What do you think was the first thing?
I think so most people can here relate with Paytm because Paytm, the founder of Paytm is from DBU. So I think
Ah,
many people are
so
very
this
much
is
interested in
from DB,
this.
is that okay? I didn't know that. Okay,
Yeah,
but what else? So I want to know your personal experience. The DB is much later in your lives, right? In Neft, okay, interesting, Sambhav. Care to explain more? That's probably the first I've heard. It's right, but I'm very curious to know how come Neft was your first. Net banking, fair, online payment, cred, very new but correct. Binance, so you have some crypto folks here, and net banking. So Neft, who that was Sambhav. Sambhav, how was your experience with Neft?
actually, can you please unmute somehow, or some of you can write also.
Sure.
Sambhav? You want to type it out? I think you have the mic as well, so you can also talk about it. The long transfer duration in Neft, okay, UPI. All right. Okay. So beyond your personal experiences, what would you feel was the first real um, development of fintech? If we had to think about when technology, so I agree, fintech is nothing but technology enabling finance, right? So from that perspective, when do you think were one of the first applications of technology enabling finance? Think back, think of different use cases you may have heard your parents, grandparents tell you. Using Excel for financial calculation, fair. Banks, okay. Net for paying college fees, okay, that's fair, okay. Can transfer funds to anyone bank account in India. No one needs to wait for someone in main. Okay. Tally. Okay, Tally is more of an okay accounting software. So fair enough. What else are we looking at? What about the ATM? Did you use an ATM much before you used anything else? What do you guys think?
I think ATM is, of course, we have seen people, we have not used it, our parents, but we have seen our parents to use it regularly.
Mm-hmm. Okay. Fine Labs. I was just typing ATM. But I will now start sharing my screen again. And sorry, I'm obviously not as good with technology as I should be. Take a little more time than I should, but here. Right. So when we look at an evolution of fintech, a lot of people use the example of the credit card, right? Because when American Express, the first known famous credit card, came into being, it was providing credit to ease the burden of carrying cash. You did not need to carry cash, and it was use of technology, right? Then came the ATMs, which is the Barclays ATM in 1967, so roughly 54 years ago, followed up with electronic stock trading, et cetera, et cetera. So this is what a lot of people think of as the evolution of fintech, which is then you went into internet banking in the 90s and 2000s, and then mobile phone technology, right? As we look at this, is you can take one step back and think about what does money mean to you, right? And the evolution of money. Some people think that, some people consider that the printing of currency, right? The paper printing of currency, which was done by China a few hundred years ago, could also be stated as an example of of fintech, right? Because it used technology for money, right? So that's one example. But if you look at money, money has evolved from being mental calculation, utility in terms of shells, etc., to use of physical currency, physical objects, which is where gold came in. And gold became what is known as a universal ledger, which means a value of 1 kg of gold was universal globally. It was basically 1 kg of gold or one gold coin, right, with a certain dimension. Everybody would speak in terms of that, right? And so it was one of the first globally accepted, universally accepted value of an object, which is effectively money, right? Then you got paper money because carrying gold, carrying silver, etc., became cumbersome, dangerous, and much harder to hide if you're carrying large sums. So what people decided was you use paper as a representative, right? So when you see your, the rupee at home and you pull out the note, if you haven't done this and if you haven't heard of it before, look at what's written there. It says, I promise to pay the bearer a sum of XYZ. Now, one of the reasons this happened is it's called a gold standard. The dollar as a term derives itself from a value of gold. So $1 was a certain value of gold. You may hear your mom, your sisters, your girlfriend, or your relatives, the women in large cases, talking about wearing a dollar, right? A dollar is that small little coin of gold that people used to have. So people said, okay, let's take paper, let's have a gold standard where a dollar would be equivalent to a certain weight of gold, right? So like say 16 ounces of gold or something like that. And that held through till the 1970s when they decided to revise from the gold standard. And then banks, central banks started printing their own money. And that's where things changed dramatically. As that was happening, alongside, we started seeing the development of computing and computer technology becoming more prevalent, more stronger, and omnipresent, right? So you saw the translation from so a question from someone where is also fiat money is that which is part of legal tender. Yes, fiat money effectively is legal tender, and in most of the 190 odd currencies that exist in the world, they are legal tender in their own countries only, right? So it is allowing the currency to be of a certain value by government decree. That's basically what it is, right? It's so you then moved on to online banking, corporate tokens, which is nothing but digital money, because a lot of the money in today's world is not transferred physically. The use of cash is prevalent, yes, but the value of cash transaction versus the value of what do you say of digital transactions is very, very different. So the value of digital transactions even before the digital revolution recently was much higher because you were not transferring millions of dollars between banks, between institutions or global payments by cash. It was all through online banking transfers, right? So the use of cash from a size perspective was different, but in terms of volume, yes, we had still. And then we moved to a situation where you had decentralized money and digital money, which is Bitcoin. I'm not going to touch too much upon that today because our focus is on India and China, but this is an evolution of how money has changed to talk about fintech, right? The next slide, in essence, also looks at the same thing, right? Which is, for me, the first use case of fintech is what's on the left, top left, which is the Telegram, right? Now, for a lot of people, Telegram is a messaging app that you've been using in the recent past, but in reality, the original Telegram was a messaging, through electronic wiring. That's the first instance, and a lot of that messages was used for um, transferring, sending messages between London and New York and cities close by like Chicago and New York, etc., talking about stock markets and news around markets because it was important to stay as up to date as possible. Then you had, of course, the mainframes. You had the Barclays ATM. You can see the first ATM machine and how it looked, right? Fairly mechanical. Even though it's automated, it's technology, but it's fairly mechanical. And then you had the story of the mainframes, which IBM developed, which is super huge computers put together for a high amount of computing technology. So that continued and transformed into smaller computers in the 80s. So you see on the right top, bottom right, um, EME Group, right? And their trading terminals. So a lot of people started trading online. In fact, when you talk about artificial intelligence and use of AI, one of the earliest use cases is in finance in the 1980s with Millennium Capital, one of the world's largest hedge funds. They have been using AI for trading since the 80s, right? So it's not a new concept. It's just that with the evolution of mobile phones and data and internet connection and amount of electronically readable data that's being generated, about 95% of all data generated in history has been generated in the last 5 to 10 years, right? Largely because we're generating so much more data now than you did before. Earlier, it was all written in books. How much can you write in a book, or stored in people's memories? Right now, everything is recorded. Right, this video is being recorded, or the session is there. There's huge amount volumes of millions and billions of videos being uploaded daily. So if you count that and you look at the amount of terabytes and that are being I don't know, trillions of terabytes that are being generated, you know that it's a lot of data that we have, right? So that's the translation, and fintech becomes important because it's enabling all of this through this data that has come through. One important turning point for fintech in the recent past was two incidents, right? On the left is a newspaper print from 2018, September 16th, right? It's when Lehman Brothers, investment bank headquartered in the United States, one of the top five investment banks in the world, collapsed, right? But the story didn't start there with Lehman. It actually started a little earlier with Bear Stearns, which is also a top five bank, which the Fed allowed to fail. All of this is because of derivatives and mortgage-backed securities. In a sense, banks started structuring or layering bonds, right? So take a home loan, right? So if one person is paying a home loan, you have a certain credit rating. A credit rating being something which is so a credit rating would be your rating when it comes to borrowing of money. So how good are you for returning money if you borrow it? And there's a rating criteria applied at different criteria, and you get a credit rating. In India, you have the CIBIL score, and so you have credit rating in the US as well. So prime credit rating is the best. Like people who are employed, have regular earning, have earning of more than say 50,000 or 100,000 US annually. So when there was very cheap money available, cheap money being very easy lending, low interest rate available, people started borrowing to start buying homes, right? So, and the housing value started going up naturally. More demand, same supply, prices will go up. So, a company known as Salomon Brothers structured something called the mortgage-backed security, which is they said if there are 100 houses in a colony, right? And if all of them represent a payment, because a mortgage payment is nothing but installment payment on a monthly basis for your home ownership. If we can combine the monthly payment of 100 mortgages, you can make one single bond, which is a combination of all the 100 installments. And if everybody has very good credit rating, they should not default. So this becomes a very good bond for somebody to take because they'll get steady returns from a highly secure and low risk bond, right? Unfortunately, what happened was they started giving these mortgages to subprime people, meaning people with irregular income or low income who were very dependent on their jobs and were not financially secure. So in 2007, when the economy started going a bit bad in the US, people started defaulting on their loans, right? So when they started defaulting on their loans, there was more mortgages in the market because the banks had to go and sell these to reclaim the value of the loan. So when you have excessive selling, the price comes down. This led to a cascading effect where a lot of these bonds that we bought were of much lower value because of defaults. Incidentally, the banks were selling these bonds to their clients, but secondly, because they assumed that the housing market will continue going up, which meant that even if default occurred, you can recover the money through housing, which is a false assumption. The banks themselves started buying these bonds because they thought it's good value, right? So during 2008, when the housing market crashed, a lot of these banks were not able to pay back their clients and they were not getting the returns and they were going and taking heavy losses. So Lehman was one such bank, and Lehman was connected to a host of all the top banks. They do a lot of lending and borrowing between each other, and Lehman's credit was frozen. And when Lehman collapsed, a whole banking ecosystem collapsed in the US and largely in Europe as well. So they needed massive government bailouts, including for banks such as Citibank and others. On the other side is the launch of the first iPhone, right? Which was revolutionary in its own because it was one of the first smartphones. Although some of you will not know it, there were other phones that had screens from before, and so this was not the first one. But this was the first what they called smartphone, including having Siri eventually that came about, and it changed the way. It changed the way that people were looking at money because now you effectively had a computer in your hand. As a statistic, as somebody mentioned, I think the iPhone 4S or not later than the iPhone 6 had enough power. The computing power in that iPhone, say 6, was more than the computing power to send Apollo 11 to the moon. So you understand the change from huge buildings of computers and the amount of computing energy they generated versus that being in your hand. How much that changes what you can do, right? So you could now do net banking online. You could watch YouTube videos on your phone on with good quality, right? You could do so much more. You could connect with people because you started having better internet connection. So it was still 2G time when the iPhone released, but subsequently things went towards 3G and 4G, etc. Right? So, and now 5G is what's being spoken about, and 6G is being worked on. Right? So you had a transition where banks were going bankrupt or were closing down and were not able to cater to their clients as well as they could. On the other hand, you had technology rapidly evolving. So you basically found a space where technology was going up, right? Banks were going down, and there was this gap for somebody to fill, and that's where fintech came in, and that's how fintech startups came in to fill that gap where the banks were not able to service these customers who were coming online through mobile phones and wanting these digital services and experiences, and they started eating it up, and eventually banks have now caught up, especially in the last 5 years. Okay, so that's the lesson on or the conversation on fintech. So that's been long. So I'm going to now move on to the different countries so that we can stick to the time and also the Q&A, right? Sorry. So when you talk about fintech, some of the major streams that you have in fintech include blockchain payments, money exchange, remittance, digital money, online banking, and crowdfunding. Another example, capital markets and RegTech are some of the things you might also hear about. So China, right? What do we know about China? The most populated economy in the population in the world, right? And now probably India is going to overtake it soon. But beyond that, it's also the second largest economy in the world, right? So the Chinese economy is worth about $12 trillion, while the US economy is closer to $70 trillion in terms of GDP, right? And the economy in China has significantly grown in the last 20 years, almost gone up 6 times. So in China, you have very high mobile penetration. Almost 850 million people have internet usage. So that's about 85 crores, of which 300 million or 30 crores are people who are digital natives. You have over 850 million smartphones as well. Number of people in rural China who use internet are about 230%. But the interesting concept, element here is on payments. 90% of payments in China are through mobile phones, and they are at least 600 million Chinese consumers using mobile payments. The valuation of Chinese mobile payments is almost 200 times the value of mobile payments in the US in US dollar terms, right? $40 trillion in US, in China versus 160 billion in the US. So massive difference. So mobile payments drives everything. And e-commerce is very, very prevalent through Alibaba, JD.com, as well as the likes of Pinduoduo. And you also have a high amount of money that's going in for high net worth individuals for wealth. China now has the most number of millionaires per capita, number of absolute numbers, not per capita, sorry, in absolute numbers, and very close to having the most number of billionaires as well. So here's a look at that internet users growth, and you can also see by age. And so you can see a lot of the younger users, almost 96% of them use internet, while when you go a little older, lesser number of them use it, but that's likely to increase in the near future. Now, interesting element about China is the number of technology firms like Alibaba, Tencent, JD, etc., who have gotten into financial services, and they are the ones who created this concept of TechFin, which is technology for finance, right? So when we compare the big American firms, which is Google, Apple, Facebook, and Amazon, you can see that not many of them are in the fintech world. Amazon is actually the most active, and then you have Google is there in banking and payments. Facebook is largely in payments, as is Apple, right? However, when you compare Alibaba, Baidu, JD, Tencent, etc., they are in across the fields, right? They're there in e-commerce, they're in banking, credit, crowdfunding, asset management, they're there in insurance. So they cover all of this. Another example is just looking at the licenses they have in the different markets. And you can see that in China, banking license, credit license, payment license, all the big four have it, whereas the American ones only have credit license of payment. Some of them have started getting into insurance, but that's Amazon, not so much more. So another look is at the Ant Group, which used to be the fintech arm of Alibaba, separated recently. They serve almost a billion customers with 700 million active customers on a monthly basis. Huge transaction values, right, and over 80 million active users from a merchant's perspective, right? And this is expected to be the world's biggest IPO. It didn't happen because of regulatory reasons, but it was expected to be about $200 billion, right? It would have been largest by far. Now, another difference in China versus in other jurisdictions is Chinese tech companies are a massive investor when it comes to investing into different fintechs and startups. So you can see Baidu, Alibaba, and Tencent invest in almost 40% of total VC money, which is venture capital money, and of which, and if you look at the top 50 startups in China, top 25 have, of the top 15 in China, you have 30 who are back invested, 14 who are Baidu, Alibaba, Tencent founded, and 6 who are Baidu, Alibaba, and Tencent offshoots, right? So you can see that they dominate that space. And the other image you see on the right is talking about the valuation of these companies. Some of them have just gone gone and listed, like Kuaishou, which is valued at 18 billion. But the likes of Meituan, Pinduoduo, etc., are on their own. They will fall in the top 20 firms in the world with valuation, like $200 billion valuation. So you have this huge investment that these tech firms also do on different valuations for their other startups. So they're driving value from there, as well as tying in their ecosystem because they want to grow along with the growing ecosystem. This is numbers that come in from China when it comes to e-commerce. Massive, massive numbers, right? Alibaba alone. So there's a thing called Singles Day, which is 11/11, which is 11th of November, which is started as a concept for singles to shop. Alibaba started it, so that's where most of the sales happen. They sold $74 billion worth of goods last year, right? That is almost double of what they sold in 2019. And you can see over 1.5 billion payments processed through Alipay, with 90% through mobile phone. At its peak, the company's processors were handling 580,000, which is like 5.8 lakh transactions per second. How many of us remember, the big billion day and others where things were crashing in India, right? Which is more technology, which is normal when you have such huge transactions. But in China, you very rarely, these tech giants are so sophisticated that they plan for high volumes and they manage those high volumes very efficiently. And that's one of the reasons for their success, right? So here's again an example of US versus China, because two largest economies. You can see Alibaba Singles Day alone is 7 times what Amazon sold during Amazon Prime Day in 2020, right? So massive, massive difference in the e-commerce play in US versus China. Coming to the Indian ecosystem, I don't have to tell you a lot of numbers about where India is in terms of our population, etc. But we are a very young country, right? And that's a big advantage that we have. And we're still growing. Our per capita is much lower than most of the economies in the top 10, us being in the top 10 as well. But we are about 1,700 per US dollars per capita. Yes, purchasing power parity, we're probably much higher. Internet users is one of the remarkable things that's happened in India. We have probably now over 750 million users, so 75 crore users. That's almost double of what it was 3-4 years ago, right? Number of active internet users. One good thing with Geo and others bringing the cost of per GB to less than what 30-40 rupees, right, or even less than that, is the fact that urban India can also join in on the internet revolution. And then you have the Aadhaar stack that was built on top of that, which allows for UPI and then instant payments, right? So we now are estimating that the Indian digital payments will grow to $1 trillion, largely along UPI, and it's continuing to be among the highest adoption indexes for fintech of people who use mobile phones and use financial services. India is tied with China when it comes to adoption. This is highest globally. So a snapshot of our startup ecosystem has been growing significantly. We are now looking at over 12,000 startups that grew between 2015 to 2020. That's from NASSCOM. And in 2020 alone, you had 1,600 startups come into the ecosystem, right? A good number of Indian startups are also B2B, which is very interesting because we have a lot of SaaS, software as a service companies and IT companies who service other businesses as well. Here's a look at the India FinTech lending map. You would be familiar with a lot of these names, right? Across payments, credit. So I think payments and lending are the largest, now followed by wealth tech, and now starting to grow the B2B solutions and the digital banking space. Others are also growing. Some more names on this chart that you can look at. Open banking and neo banking has been more popular recently. So providing your digital banking services without necessarily being a bank. They use other partner banks like ICICI or Kotak or Yes Bank for providing those banking services. But for as far as you're concerned, you're dealing only with 811 or you're dealing with Neo or whoever there is. So if you're going to break India down, right, I would say you can break India down into these three parts. India 1, which is the mass affluent urban centers with 110 million people with about $1 trillion in GDP, which is then almost 10,000 USD per capita. The interesting thing with that is that means it's about 6 times greater than what the rest of India is. And this is where a lot of the bigger fintechs are also focusing on the wealth side. Then you have the middle class, second tier India, which is 104 million people, 300 billion GDP, 3K per capita income. And then that's also being served by more of the regular fintech players. Then you go into India 3, which is more like the Bharat part, right? Where you have 1.1 billion people, 1.1 billion people, per capita of 1,000 per person, which is 60,000 rupees, right? In a sense, not significant, but it's okay. And it's faster growing. What is happening is a lot of the fintechs now want to cater to Bharat, as you would call India 3 in that sense, and trying to not only build on UPI and the India stack for financial inclusion, but also look to grow that piece from a wealth perspective and affluency perspective to fund them so that you have a cascading effect across the nation. Now, unicorns in India, it's been a remarkable year already. Last year, there were only about 11. I'm saying they were only, but still, there were 11 unicorns. This year, we already seen 14 unicorns before half year has come into being. The latest one was Zeta, which is a B2B fintech company that raised funding last week, or actually earlier this week, and also came into a unicorn. And then you have Digit, you have Cred, you have Misho, you have also Grow. Plus, you had Pine Labs tripling their valuation recently. So, a massive, massive growth in the fintech investment space and valuation space. So fraction-wise, some of our unicorns have taken a long, long time. The average time to unicorn in China is 4 years. In the US, it's 7 years. And in China, 50% of those unicorns become unicorns within 2 years. So you can see it's a rapid rise. And we're starting to see that in India as well. China is probably startup ecosystem 5 to 7 years ahead of India simply because more money was going in and was more, and it was a larger economy than India. While we are catching up now, and I expect that the numbers of average age to unicorn will also change significantly in the coming 2 years. So I'm going to pause here. Achintya has a few questions for me, and I will touch upon potential career options for you guys as part of the Q&A. So we can do 5 minutes on that. So Achintya, over to you.
Thank you. So it's amazing that you told from 2007 to 8 scenario to China ecosystem, E&D Europe. I was like seeing from that how this has evolved totally. That's fantastic. I think so. One of the main question I think that I have, even everyone has it, even that you have done in 2001 from engineering from RB College of Engineering, Bangalore.
Yeah.
Then you work as in Future Fest as an associate over there for a couple of years, and then you moved to Hong Kong, did your MBA from there, university, then from London in the school, and now you have founded so many startups, I think more than 5, 6, and you have been part of many different associations also.
Right.
So how you proceed like this? That because I think for this some skills like multitasking and adapting and learning every time a new thing is very much necessary to get this point.
Right. Thank you so much. That's it's a very good question about evolution. So if you had asked me, so I started my career in 2005, right? I did my engineering in 2001. So probably I've been yeah, probably 20 or 17, 18 years older than most of you. So almost double your age. So I started as a trader, did not know anything about finance, markets, interest rate futures, mortgages, etc. Learned a lot on the job, but it is important for me to be with a company that trusted its young employees, and Futures was brilliant at that. And I learned a lot. You were given responsibility and trust, and when you're doing trading, you were given the responsibility of growing the company's capital, and that's what we were doing, right? So I enjoyed it a lot, but if you take a step back from where I started my career, I want to talk a little bit more about my journey to engineering and pre-engineering, right? I was very active in my extracurricular, from debate to organizing to being class rep, etc. So I looked at things more than academics, and it's a different way and different personalities that people have. And I was active in sports. I was active in, and from a very young age, I used to read the newspaper back to front because you want to first read the cricket news, and then you want to read the rest of it, and then you come to politics and Bollywood, and then you come to the front page, right? So I used to read news like an addict, and I'm a news junkie from that perspective. So I was always interested in current affairs, and when I was doing debating and public speaking, that was very useful for me as well. So being active in the entrepreneurial world in the extracurricular world kind of gave me some life skills outside of the academics, which is to learn how to handle money. I was doing part-time work from the age of 12 or 13 or before that as well. So you learn about responsibilities, you learn about how to handle stress, right? So when you're organizing events, like Achintya is doing now, you learn about that, which is find these speakers, find the sponsorship, find people to come and attend, do the marketing. Some people will be sitting and doing nothing. ये तो वेला है, ये कुछ नहीं कर रहा है, ये मुफ्त है, इसको क्यों रख रहे हो? Right now, you have all of those experiences that you go through. You go through anger, you go through frustration, you go through sadness, and you go through joy, right? But doing extracurricular is very important. It helps you understand the world better, and I highly encourage that, right? Of course, not at the cost of your academics. That shouldn't be the case, but try doing more, engaging more. It also gives you life skills because there's a lot of teamwork involved beyond, even if you're in a software team, a lot of teamwork involved, and personal communication skills are very, very, very important going forward, right? What you've learned in college will be relevant for 4, 5, 6 years, but it's less about the actual text of if you learn about a technology, like say if somebody learned Java 20 years ago and it was the hottest thing then, now Java is not necessarily the hottest thing, right? You can probably use an auto compiler online for a lot of Java applications, and in a lot of cases Java is not being used. So technology is evolving, but what those people have learned and what you have learned is how to write logic, right? How to code, and that stays with you. So in a similar way, building those life skills of how to be in a team, how do you do group discussions, how do you balance, how do you take responsibilities, how do you take instructions, right? How do you build something? How do you deal with crisis? All of this are important. So extracurricular sports are important for character building and personality building, and that's important. So after when I was with my trading, I was always open for experimenting. So I did a lot of that experimenting in my life in terms of work-wise. Try something new. If I fail, my company was happy for me to fail quickly, and then try something again new, which was honest, um, where I was honestly looking at it. Right. So that's number one. And then I got an opportunity to go to Mauritius and build a team out. So I learned a new culture. I lived on my own for the first time in my life. So a lot of learning there. So there's a lot of these experiences that led me to coming to Hong Kong to do my MBA. It's a joint program between Hong Kong University and London Business School. It's a one-year program. So again, I've been to Hong Kong a couple of times visiting with my company and personal visits, but it was like 2-3 days, right? But living in a city like Hong Kong, it's a bit like imagine Mumbai on steroids, right? But it's a global capital. It's a multicultural space. You can see that photograph in the middle. That's us celebrating the ranking #1 in Asia. So those are my classmates, and the guy in the middle, the Indian guy with the tie, blue tie, is the program director of who also came from Mumbai 15 years ago. And but we all there, we learned a lot, we engaged with quite a few people, and I started in a similar way. I was almost a nobody in Hong Kong, right? And that's what I was saying. Actually, I'm not a big name. I'm just a nobody. I started engaging in the ecosystem. I started volunteering for things. I started helping out with organizing things, right? So that's how I joined the FinTech Association of Hong Kong and going on to co-found the association. It's an industry body like LASCOM or others, or like your, one of your associations in your or societies in your university. And it was not a salaried role, but I took that up initially because I wanted to understand more about what was FinTech about, how was things changing, and engaging in more people and building my network. We always encourage students to get involved. Not too many do, but that's actually for some of you who are looking to build a career in whatever field, a professional career. In your third year, in your fourth year, especially, right? Those of you who will be doing 4-year courses, start engaging in some of these associations, volunteering, because it also forms a way for you to get your job. So the story goes, I had left my other job just before the association launched. Once the association launched, we were looking to fill it with somebody who can run it full time. So that became my job, right? And it was a full-time paid job. So I got so much exposure leading the association here in Hong Kong as somebody who had been in Hong Kong for 3 years, of which 1 year was as a student, right? So you get these opportunities. It's, as they say, make these opportunities for yourself. Being there, right time, right place. It's important to make yourself get there, right? It may present, it may not. And I've been very fortunate that way to meet industry leaders like this Murthy as part of my role in the UN SCAP digital task force, which is for enabling youth and women entrepreneurship, as well as a bunch of other things that I do, including IndiaTech Hong Kong, to bridge the startup ecosystem between Hong Kong and India. So what I do full time is FinStep Asia. That's my company that I launched in 2019. It was a difficult decision to leave a salaried job, but I wanted to start my own company because I believed it was the right opportunity in the right time. And I've gone through a year and a half through COVID, suffering month without any revenue, having to work on savings, loans, support from people, and also finding some business, changing my business model multiple times to survive. And now we're seeing some pickup in business and starting to form a brand, and we're building on that. I know a long-winded answer, but yeah.
So it's really inspiring also. It's not a long-winded, you can say it's more inspiring. I can, relate to the whole story from being an engineer to the position you have. I want to know one thing more, that I have seen that you have started a lot of, communities like co-founder of FinTech Association of Hong Kong, IndiaTech Hong Kong, basically. So what interests you to be in Hong Kong, basically?
What attracted me to Hong Kong is 3 things, right? I wanted to go from working in India to go to a large financial center because I was a trader and so I wanted to do that. So Hong Kong is Asia's largest financial center. Number two, I strongly believe in the Asian century, as they call it. This is the Asian century. And I believe there's a shift in economic, political, and multiple other things from the West towards the East, largely led by India and China. Right. So I wanted to get closer to China to understand the culture, understand the business environment, because China is going to be the world's largest economy, most likely in 10 to 15 years' time. And in 30 years' time, India will be the number two after China, with US being number three. So India, China, despite political differences, military conflicts, will still be large trade partners. And so understanding each other's business is very, very important. And that's where I came in. Number three is the university in itself was a great combination to be able to do both Hong Kong and London attracted me. So that's what brought me to Hong Kong. What kept me in Hong Kong is its wild energy. It's amazing energy. As I said, it's a lot of hustle. People don't have time. It's Mumbai on steroids, but it's also a extremely beautiful country, city, not country. Sorry. Hong Kong has 60% of the city is national parks and greenery. You could be in central Hong Kong in the middle of some of the tallest buildings in the world, and you're maybe 30 minutes away from a beach where there may be only 5 people on the beach, right? And a beautiful beach as well. So you have that contrast as well. So it's a very good work-life balance if you know how to do it. But I love the energy of Hong Kong. I love it's got a character about it. It's one of the oldest cities in the world as well. And it's a very entrepreneurial city. Hong Kong has long been about trade and entrepreneurship and evolution. So that's what kept me here.
That's really fantastic. I've seen that you have been a part of many different like you have been association, you have started a couple of companies, and you're currently the co-founder of many different ways. Like one is the venture capital, second is the FinStep, and also how you multitask between all and able to focus on all these stuff, along with being so active on Clubhouse also.
Right. It's a bit tough, right? You need to have your priorities drawn out, and you need to be able to have understanding family, right? When if you come out of university, you probably have a lot more. You may have lesser, not all of you, but most of you may have lesser commitments when it comes to family commitments or personal commitments, and you can probably do a little bit more when you're building a profile out. But it's all down to passion, right? So for me, work was all consuming. So I would do 12, 14 hours, but I enjoyed it, and that's the key element. And I'm somebody who likes building constantly. I always want to keep building. So that's why the associations attract me, because it's community building, it's contribution, it's giving rather than taking. So that helps a lot as well. And I like being part of new things. It's a lot of learning for me, right? It may think like, oh, I'm running this Clubhouse, I'm running the other thing, but for me, it was like Clubhouse interesting. What can I do with Clubhouse? Like, oh, it's a new platform. I can connect and I can listen to people actually, how they talk in the US or in Latin America or elsewhere, right? Which I don't get to do in my day-to-day work, right? And I connect to a lot of other people. Running associations or joining them is a community organization, meeting like-minded people, meeting very different-minded people, but in the same space, exchanging points of view, not a lot of knowledge. So that's where it is. So prioritizing your time is important, but you'll also have very long days, and it can be very, very tiresome. So being able to sometimes take a break is going to be important. Yeah.
True, I can understand. Like I downloaded Clubhouse yesterday, and I was like, I slept very late because of that. Hopping to different stuff. Like I can see that many people even in my college DTU also, people engineering that wanted to go into fintech, and they said that they don't want to. I have seen a lot of my peers saying that I don't want to do a 9 to 5 job. I wanted to do my startup, and this is the real game, not a 9 to 5 job. And sometimes they are very, of course they have a proper plan, but sometimes they become too hurried to, because of the craze of doing an entrepreneurship and fintech. So what advice you want to give to those people?
Right. So look, yes, a lot of people think about opportunities. Excuse me. Let me open up your possible opportunities in fintech. So when you look at career options in fintech, you have multiple career options, right? Working in a big tech firm, being Amazon, Google, etc., who are active in India in fintech, running your own startup. I know some very young people who were in their early 20s who are running large fintech startups as well. But the key element is not to think about, oh, I want to work for a startup, or I want to work for a bank, or I don't want to work for a bank. Think about the role. What do you want to do? Do you want to build products, right? Do you want to do
Right.
business? Are you a marketing person? Now, if you're a technology person, okay, do you like certain type? Like, do you want to code? Do you want to be a developer, right? Do you want to be a program, product developer? What do you want to do, right? Do you want to build algorithms for data analytics? What is your strength? But when you're going in, it's fair to a certain extent when you say look at a bank and you say 9 to 5 job here. But in reality, in India, I don't think there's any 9 to 5 job, especially when you come as an engineer or tech person. It's an element of a lot of banks currently are undergoing digital transformation, right? And they're making a lot of changes. That's actually very exciting. I look at it as a challenge for newcomers, which is to go and work for a bank which is transforming and is forward looking, because you know that they want to change, but they are dealing with legacy infrastructure. They're dealing with a lot of problems with staff and people who are not willing to change. But that's a challenge to look at, because you can then learn a lot about why people are changing, what needs to be done, and you have more solutions. When you have everybody wanting to do that change, it's also great. It's a different way to look at it, but I like the challenge of things changing. And if they change and they move, then you have learned about old system and you know about the new system, and you're now with a company that is looking forward, right? So you have that as an element while working for startup. And the third part is when you're working for banks and some of the more traditional firms, there's a lot of structure, right, for corporate, right? So it's very structured. Your role is defined, what you do, what you don't do, how you engage, how your growth is. And a lot of people may think now that, oh, I don't want that structure, I don't want to be defined, etc. But in reality, think it through. Is your personality somebody who likes structure, who wants to be instructed, who doesn't like being disorganized, etc.? Then it's good for you, because it's a lot more suitable to your personality. While when you go into a startup, if it's a early stage startup or even not too far off, not too mature, you will have multiple responsibilities. You have to balance a lot of things. It can be chaotic, right? It's enjoyable, it's thrilling, but it also comes with the risk of potential collapse, potentially no job for a few months, right? So you have to balance that out. And I would say try both out, right? You're young, try both wherever you get an opportunity. Try working at least for a couple of years in each company. Most people will be laughing, 2 साल कौन काम करेगा, एक साल काम करके I will leave, right? But the fact of the matter is, I worked for Futures First for 9 years, right? A lot of my colleagues I worked with, including those who I started with, they've been there for 16 years now. So you can get a sense that you like, that's very long time, agreed. But if you don't spend enough time in a company, you wouldn't have understood about the way things work, how people react, what are the products to be built, what is the industry doing, especially in your early years. So learning is very, very important. So try to find companies where you will learn a lot, even if it's hard work. It's, it maybe it's a struggle for you in terms of effort that you need to put in, but more effort you put in, the more you learn to a certain extent. I'm not saying, be taken advantage of, but secondly also is try to see, you don't often have this choice, but you will have this choice later in your career, is the person you will work for, meaning the boss, right? Finding a right boss is very important. At times you don't have that choice, as I said, so you go in and then do the best you can with them. But where you have the choice, try to find people. If you have an option of somebody you feel would be a good boss or company culture looks good versus where one place where the company culture is bad but the money is good, you may want to go for a place where the company culture is good, because you can then grow better and it's better for your mental health as well. Right? I see there's also a question on what fintech companies expect from MBAs. To be honest, fintech companies, they don't hire too many MBAs. India's case is slightly different, but then they're looking, when you come with an MBA with fresh graduate, you will probably land up in a middle management job. People expect from MBAs to be very methodological, help in strategy, so be very good with logical analysis, and be very good with, in general, business analysis, right? So strategy, operations, etc. becomes very important. So when fintechs hire MBAs and they're an expensive hire, they expect you to hit the ground running. So you need to be prepared for that, right? So you need to be able to build, you need to be able to contribute strongly from day one.
Completely agree with the point. I think, guys, now we, after the time constraint, we can open for the questions. You can put on the chat and I'll ask the some. So I think this one question Sambhav has asked, how was the employment opportunities in Hong Kong for Indians? There are companies that recruit from India.
So in Hong Kong, there is 3 levels of recruitment, right? And the reason I'm saying three rules, I mean 3 levels is one is you have the local campus recruitment like happens in India, right? Second is you have a lot of people from across the world, and because you have so many international firms as well who want to come and work in Hong Kong. Now, COVID is a different story, but many people who look to come to Hong Kong. So through the management associate program, there are less number of jobs for fresh starters, right? So, and then the number 3 is people. You get people who are hired on certain categories or roles which are in demand, and there's a lack of talent in Hong Kong for that to fill the supply, to fill the demand, right? So, like technology, for example. So, there are fairly decent number of Indians in the banking world, and now increasingly in the technology aspect. So, from IT product management, general IT management, to coders, to fintech, etc. Quite a few people who are engaging on both sides.
Oh, perfect. Sounds perfect. So, like this one question is Mohit Agarwal asks that how Chinese fintech companies are really different from Indian fintech companies, their environment and everything.
So one of the things is there's a statistics which talks about Indian fintech companies. A lot of them think about going global, right? So they're building for India but also want to go global very soon. While quite a few Chinese companies are building for the Chinese ecosystem, that's one subtle difference. Though you would say a lot of Indian fintech companies are building for Indian ecosystem, but they always have an eye, one eye looking out for how they can expand internationally. So that's one. The second one is size and scale. As a, let's take India's most valuable fintech, ATM, or 20 billion valuation, right? I showed you Ant, 200 billion valuation. You see the size, you see the difference, right? So you have some massive firms in China, largely because they are part of that platform economy, which is the Alibaba Tencent economy, right? Which is one platform to do everything from chatting to games to messaging to actually work because you can do video calls, communication, as well as payments, right? So that's what Alibaba and Tencent did, while the others also grow very quickly. So that's number 2. India doesn't have too many platforms, though Jio, Paytm, Flipkart, MobiKwik to a certain extent are all starting to move towards the platform concept, right? Number 3 is funding. Indian startups are now starting to get a lot of funding, but are behind the curve when it comes to where the Chinese startups are. They would get a lot of funding because the funding market in China is much deeper and people have gone through the cycles. So, and a lot of fintechs have also listed. Number 4 is the purchasing power, right? So, how many of you have actually paid for an app or paid for anything on an app, right? You all prefer something that's free, and that's completely understandable, and that's what most users are looking for. But if you had to pay for something, your average payout per user is much lower than what somebody in China can pay, right? So because their per capita is higher, almost 5 times of what our per capita is, people have more affordability, so they are willing to pay for more products, which means fintech can be more profitable sooner. And because they chase IPO listing, etc., there's a lot of focus on profitability and revenue generation as well. So some of these differences, of course, you're catering to a very different culture, right? China is much more urbanized than India is. So as we mentioned, right, what 40 to 50% of our population is still agricultural and rural, right? While China, you're talking about 20% to 30%, a very high urbanization rate in China. So that's another important difference.
I think that's a really insightful study. You cannot even find on net basically to get. I think one question someone has asked, and it's a really important question because assets is even our societies on based on the similar stuff that that financial knowledge in India lags behind. For say engineering students, we think about going to fintech, but we don't have any knowledge of finance, and I think that is why we have even started this society that people can get knowledge, but people don't have many. But
So look, actually, let's take me as an example, right? I'm an industrial engineer, and I started in finance. I was trading interest rate derivatives I'd never heard of in my life. I learned. Actually, finance as a concept is not very difficult. I believe it's much more easier to learn than engineering. So this is just concepts Most people have done maths to really understand mathematics. Yes, corporate finance is a little more tricky. You need to understand more things, but understanding simple stuff about buying and selling, investing, etc., payments, loans, it's straightforward. You do it in your day-to-day life. So everybody kind of gets finance. So don't be too worried about not understanding finance. I know there's this question about GARP as well and FRM certification. You can look at FRM certifications if you want to do it. Some people also do PFA, right? These are good certifications that give you good understanding. So certifications are never bad because they build your technical skills, right? And now let's take about jobs, right? Of, of your, colleagues or batchmates, etc. You're what 10 different branches. How many branches do you have in DU?
In DU of engineering,
Engineering. So
of 15 different branches we have.
15 different branches, right? Now, about 50% of those will all end up in IT companies. And actually, I'm being conservative. Probably 70% of them will end up in IT
70,
companies.
75, of course.
Yeah, 70% of those people have not done IT in their lives. Correct? So Infosys, Cognizant, TCS, Wipro, etc. will train on your soft skills, software skills and coding skills and help you out. And there you go. Now, if they've been doing this for the last 20 years and successffully, what does that tell you, right? Your underlying degree is a lot about, methodology, logical skills. Your technical skills are important, but not as important as those other skills that you have acquired. So pay attention to that. So in a similar way, when you go into fintechs, this will be the same thing. That a fintech is largely a tech company that's enabling finance. The finance element of it is actually not as significant as the tech part. So knowing the tech part will be more useful to you than understanding the finance part. As I said, finance can be very easily explained. Do read up. There's enough blogs now. There's a lot of influencers, newsletters, etc. on fintech, and I commend you, not condemn you, commend you guys for the wonderful work in setting up a society to educate your batchmates. Right? That's a very good thing to do. Yeah.
Of course, thank you, sir. I think we can have a last question.
Yeah.
I think what one advice you can give who are aspiring to be like you, man, like wanted to have something similar like what you have achieved. So one advice you want to give.
So don't try to replicate me. Right? And I clarify there. Right? What I mean by don't try to replicate me is not saying that don't become, try to become successful or go to, overseas and try things out. It is more a question of you can try to aim for somebody's success or milestones, but build your own targets, right? And if you ask me what I planned for 16, 20 years ago, am I there? Probably I'm not, right? But I always wanted to be entrepreneurial. I always wanted to build things, right? So that's how I found my first job. Excuse me. And I took it from there. So try to be the best you can. Be very passionate about what you do. If you don't enjoy what you're doing, give it a few months. If you still don't enjoy it, try to find something else, right? It's very important that you enjoy it. And if the rewards are worthwhile, you put in the effort. And if you want to scale, be open-minded, right? Be open to change. Don't be too fixated about your abilities. The skilling cycles will change very rapidly. The skills that were prominent 10 years ago are no longer relevant in many cases. Bankers were earning maybe $1 million a year are now jobless. I know many bankers, senior bankers, were looking for jobs because they're no longer needed because technology replaced them. So being relevant, knowing what's happening and constantly learning is important. I was asked a question why I did 2 MBAs. I didn't do 2 MBAs. I did 1 MBA, and I don't think I'll do a second MBA ever again, unless I may do an EMBA in 30 years' time. But the one, it's a joint program between London Business School and University of Hong Kong. So you get to become an alum of both the schools, and you get the degree from the University of Hong Kong. Basically, that's the answer to somebody else.
Right.
I know one other question that I quickly will address. I know we're running over time as well, but it was about when should you do your MBA. Some people do what's the right like to do the MBA right after their engineering, and it's a model that works in India because there is campus hiring. But that's only if you get into the top B schools, right? I would actually advocate at least 3 to 5 years of work. Most international B schools do not take you into their cohorts unless you have 4 to 5 years. That's the average year. I was told by my cousin 20 years ago that work for 6, 7 years before you do an MBA. I ended up working for 9 years before my MBA. So what is the reason I would say that is when you go into an MBA right after engineering, it becomes very theoretical and then you're trying to apply it in practice, right? Whereas MBA is a lot about how to do things and how to manage, etc. So if you work for 3 to 5 years, you get a sense about how the industry works, you get an understanding about your own personality, etc. So that helps you then when you're doing the MBA, you're not only learning the theoretical knowledge, but you'll also be like, this is what happened at work and this is how it could have been rectified. Or I recognize this case study because that's something I've dealt with or seen in my working life. So I highly recommend people waiting for 3 to 5 years before doing an MBA because you get some work experience and it's much better. Maybe if you're not doing a GMAT or TOEFL, etc., I think the validity is 3 years. So you may want to do it a couple of years after your engineering, just so that you're fresh with the examination, but apply maybe in your 4th year of work or 3rd, 4th year of your work.
I think that's fantastic, sir. And I think this is all from our side. And really thank you for being here and getting time for us.
Not at all. Thank you so much for having me. Deep honor and appreciate you guys having me here. And good luck. I will type out my email address on the chat, right? And anybody who wants to get in touch with me, please do get in touch with me. If you have any feedback, you didn't like something I spoke about, feel free to let me know as well. You can also connect with me on LinkedIn, which is a good way. If you're looking to get into the space, do start a LinkedIn profile if you don't have one and keep it active. Keep a photograph, write a little bit about yourself. It's one of the first things that recruiters look for nowadays is the LinkedIn profile. Yeah, there you are. That's my email address. And if anybody if you want to engage and talk, more than happy to connect.
Thank you so much.
Thank you.
And thank you guys for being here too.
Thanks. Bye.
Bye, sir.